So I wanted to quickly show you when you see the question regarding for preparing a bank reconciliation, what you need to do at the very beginning of your question. What I need to do. Okay, so we're gonna see a quick examples from our textbook. I didn't use one of your assignments. I use exercise A-10. Those questions are basically the same. I'm gonna go through the question and then I'll let you know there's some tricks, okay? So we'll see this question. This company, the general ledger's cash account is shows as follows. So for those kind of bank reconciliation, they always give you two different. One is from the book, which is also like this business transactions, shows the debit and credit and the balance, right? And then they also show you a bank statement for the month. So they show you the bank statements as deposit and withdrawal, and also give you discrimination. And also they shows you the balance of this bank statement for the specific month. What you always need to do is, I show you a template. So the template for bank reconciliation is like, you have your company's title, you have the bank reconciliation name, and then you date the date. I recommend you to follow this template. Okay, so you always start with the bank. Now, the first you want to start with the bank balance, which will show at the end of the month. This is not the question I just showed you. It's a different question. Now we could see from the bank statements. Now, what we said, right? We start with the bank side. Now we take a look at the bank statements. We know the bank statements balance at the end of October 31st is $16,764. So we put this amount at the very beginning of our bank reconciliation steps. So that is the very first step, put the balance in there. Now, what you need to do is do the comparison. We see the deposit from the bank. We have 20,000. Let's take a look at our book. We have 20,000, right? Now we have another deposit, 18,000 in our bank statements shows $18,000, and also shows a 5,200. There's shows 5,200. So this all match. And then we'll take like there's an interest deposit. We do not have interest deposit in our book. So we know that we're going to add or deduct the interest revenue. Now, the other one is deposit for $10,500, not showing our bank statements, which means this deposit is in transit. So which means we already deposit this amount into our bank account, but because the time differences, the bank account didn't show this deposit app. So what we need to do for the deposit part, we need to add in that $10,500, right? And we're gonna do this $4 when we do the books. So now we see our bank statements, we lose that $10,500 deposit. Now we need to add it back. So when you do your reconciliation, the very first step, when you list this balance at the end of the October 31st, now you need to add back that deposit in transit, which shows in your book, but not in the bank. So that will give you a total amount. When you take a look at this question, there's a little bit tricky part is you see that there are $120 service charge being charged twice. They're not supposed to be charged twice, right? So they're supposed to only charge once, which means we have to add this back into our bank statements because it's a round option. So it's around $120 has been charged. So for our bank statements under bank parts, when accept deposit in transit, we also need to add this reversal of 120. Reversal of 120 service charge. Okay. So this is for the question. Now we need to go to the other side. We see the withdrawal parts. When we take a look at the question, the withdrawal from the bank statements, we have $6,000 withdrawal, exactly match our book. And then 18,000, and then 5,000 withdrawal, 5,000. And then that's it. So we actually have two more checks, 236, 237 shows are in our book, but not showing our bank statements. So what do we need to do? We need to subtract the outstanding checks from our bank account. So remember that if it shows the withdrawal in the books, but not shows in our bank statements, the check number has to be deducted. Now you can see this our template. Last outstanding checks, which is showed in our books, but not in our bank statements. So when it's those 236 and then 237. So the total two amounts will be added in. Then we're down our bank balance at the end of the October 31st. When we finish our banks, we'll go back to the books, right? When you take a look at a book, we can see that everything matches. First of all, we list our books balance, which is the very end of the October 31st. We put this number into our book balance. Okay, so this is a book balance. So for books part, you need to add bank connection of notes receivable or interest revenue. Now, interest revenue from our tax book, you could see that there's 4 deposit. Everything matches, right? There's only $4. We didn't add it in because this is the interest. So what you need to do for the book side, we need to add that interest revenue, $4. And then what need to do for the book side? To see that we actually recorded everything. The only thing we didn't record is $4 and the service charge 120. So we need to add or subtract the service charge from our book side. So we need to deduct this $120 service charge from our books. Okay, then that's you finished your question E810. So that is how you work for the bank reconciliation. Now, the tricks I want to show you is those accounts has no change. What that mean? This template is always stay the same. We see banks always start with the balance. If there's a deposit in transit, we always add it in. If there's a overcharge, we add it back. Outstanding checks, if it's showing in our books but not showing in our bank statements, we need to deduct those outstanding checks. Then we go to the book side. You always start with the balance. You have to add it back if the bank connection of notes receivable. So that will show in your bank connection or bank deposit parts. So it shows in the bank deposit part, but not in your book parts. You have to add it back. Interest revenue, if it shows in your banks, but not in your book, you have to add it in. If there is a return checks, you have to less it. So if your book, if you said your customer deposit book, but it's non-sufficient funds check, then you have to deduct it from your book because you probably already recorded as your deposit, right, in your books. But banks is not recorded as deposit because it's non-sufficient funds. So those are our service charge. We need to deduct it as well. So those are the stables accounts remains in to books or remain into banks. If you want to remember that, will make your work much easier. So that is all for any homework you need to do regarding the bank reconciliation.